Hello everyone. This presentation is about investing through mutual funds. I am M. Ashok Rajakumar, AMFI registered mutual fund distributor. My AR number is 306078. These are my contact details. Before going into the presentation, I would like to share my credentials. I did a post graduation certificate in financial markets from IMI Kolkata and NSE. IMI Kolkata is a management institute. NSE is our national stock exchange. It's an application oriented academic program specially designed for fund managers and entrepreneurs who would like to pursue business in the similar field. Along with the program, I did NISM certification in basically NISM is National Institute of Securities Market. I did certifications in mutual fund distributor, equity research analyst, which is basically a fundamental analysis of stock market, risk management, fixed income security, investment advisor, derivatives. Two courses I have completed. Before taking up this role, I was a manager at BHL. I had 15 years experience. I resigned this job to take up this new responsibility. With this certificates and post graduation program in financial market, I can easily take up a job in any AMCs. But I prefer to become a mutual fund distributor to serve the investor community so that they have a proper guide from a professional person, and by guiding them, even I will also have my own growth. Let's move on with the presentation. We will divide this into four parts. Part one, we will discuss about investing and asset class. Part two, we will discuss about stocks and mutual fund. Part three, what the stock market, that is the equity, has done in the last 24 years and what to expect in future. In the last part, we will discuss about financial plan for a family, what I will do, what I will get, what clients will get, and the conclusion part. So let's start with the question why. Why is one investing? It's always prudent or smart to include the fundamental concepts in all the things we do. So we will have clarity in our activities. So we do investment for two purposes. First is to save for our future spendings, that is kids' education, kids' marriage, and also for our own retirement. So here we decide the future amount and the time available to achieve the goals. In this case, we can take only low to moderate risk. The second purpose of investment is to build wealth for next generation. Here there is no timeline, so excess money. So here in this case, you can take moderate to high risk. We will discuss in brief about the first category of investment to save for our future spendings. Here, what we will do is we will break down the future spendings into three categories. First category is desire. Here we have buying a house, vehicle, holiday trip, etc. Second category is commitments and responsibilities. Here we have son, child's marriage, child higher education, and our own retirement life. And third category is emergency. First two categories can be planned. First one is negotiable go type of goal. Second category is like a non-negotiable type of goal. Here you have to compulsorily do these activities in your life. Then the third category is emergency. Emergency cannot be planned, so take health insurance, term insurance, and emergency funds, and have emergency funds before start investing. So now for each investment plans, we decide the cost of future spending, the time available for that specific goal, and the inflation rate. Inflation is nothing but the rise in cost of goods and services. It can be taken 6% roughly for food items and 10% for education and health. So now based on these three parameters, we decide the amount we need to save each month from our salary, and then we do investments. If we do like this, we can achieve all our life goals with ease. So now we will see the key criteria of investment. The most important, foremost thing is safety of investment. It must be safer to invest. Next is liquidity. It means more demand and supply should be there for the item. Then comes the divisibility. It means it should be buyable and sellable into small parts. Then returns must be good. Then it should be convenient to do transaction in the asset. Then the size of investment should be smaller. Like even if we have 1,000 rupees, it should be possible to invest. Then it should be tax efficient. Next, we will discuss about the asset classes available for us to invest. Based on the key criteria we discussed in the last slide, we have four important asset classes. First is real estate. If we have a best property, then we can expect 10 to 12% return. Then commodities, here gold and silver is there. Here also we can expect 8 to 12% return. Then we have the equity. Equity is nothing but the stock market, and here we can expect 12 to 18% return. Then next is fixed income. Here we have FDs and bond market. Here we can expect 6 to 7%. So among this, the most superior one is equity. That is the stock market. It gives very high return, from 12 to 18% return, and also at the same time it is more risky. So let's see further about equity.